finding, Aaron, have the news in the last 24 hours, has that changed the way you're positioned in this market?
So I think the biggest impact for me is I was looking for a dip in the small caps, like a really good entry point considering the higher growth. And with this increased inflation, and we've seen a couple numbers, but this really sort of seals the nail in the coffin, small caps are going to be most affected by higher inflation, where their valuations are going to come down. And I think that that entry point has been pushed out even farther. It's going to be even longer before we see them really outperform the large cap because they're most exposed to higher cost of capital, higher borrowing costs. So, the small caps have been in a trading range since the spring, and I think that might continue well until 2022.
It's interesting with today's session, the whole value and growth debate is out the window because they're both kind of struggling, and it's the defensive nature of stocks. So let's talk about the broad market because in general, stocks have gotten a lot cheaper in a way that personally makes me start to salivate. Aaron, you talk about valuations a lot. 4 PE ratio now in the S&P 500, 20.6 back in February is 23.4. Does this at least pique your interest? Doesn't this get us closer to really buying the dip that matters, the valuation fundamental dip?
Yes, but I don't think we're quite there. So it's yes and no. We've been declining since the spring, and at 21 forward, I've talked about how analysts have been underestimating earnings since the beginning of pandemic. So if you sort of adjust for their new underestimation, it might bring them down to 19 times, but that's still pricey. So I think once we get somewhere closer to the 17-18 range, which was pre-pandemic, that is really when you're going to see massive equity flows into it. You may not have to wait just until then, but we're getting very close.
Speaking of